As we all know, the economy has been at a near standstill with much uncertainty in the market. This has led to questions over the stability of the housing market and more specifically, mortgages. Now we all know what mortgages are. You borrow money and you make monthly repayments. But due to quarantine and social distancing regulations, many employees have had their hours reduced or even lost their jobs. And without government support, this has led to mortgage repayments being in jeopardy. Many people, including esteemed economists, have been calling for a housing crash, but they've been doing this for years and years, so we decided to take a closer look at the issue to see whether it will or won't happen. Now, we've talked to many people on this show, and many of them have said that the housing market is as strong as it's ever been, but this simply isn't the case overall, with Melbourne's housing market pulling back.
In fact, housing prices in Melbourne have fallen by 3.8% in the past 3 months, while the rental market has also suffered a 3% decline. However, when looking at the economy overall, the housing market has been relatively resilient.
Now, obviously, there have been several factors that have led to the decrease in the renting and buying market, but there have also been factors that have held these markets up in comparison to the overall economy. Now, with the rental market, this has been bolstered due to increased demand due to people losing their jobs and higher unemployment. As people can't afford to buy anymore, they've resorted to renting.
On the other hand, the decrease in the housing market has been softened in part due to government support as well as low interest rates. Another part of this is that supply has been low, giving buyers less choice. Due to social distancing regulations and quarantines, many sellers are too scared to list their properties, with listings being down 15% from last year.
So the lack of supply in terms of houses being listed is propping up prices.
According to a survey by Morgan Stanley, 55% of Australian mortgage holders that were surveyed were receiving some form of financial support from the government or the banks in Australia.
Of that 55% of Australians who required mortgage support, 8% got help from their banks to defer their loan payments. 24% got one or more payments of $750, while 11% accessed their super early to pay off their mortgages.
The more worrying side to this is that 22% of mortgage holders were on JobKeeper, while 15% were on JobSeeker. This means at least 15% of mortgage holders are on the dole and will continue being on the dole. This means that 55% of Australian mortgage holders are likely receiving some form of financial support to pay off their loans.
And the alarming thing for this 55% of people is that if they don't get more economic help from the government or the economy restarting, they could default on their loans.
What we also know is that 1.3 million Aussies are negatively geared, meaning they have borrowed money to buy income-generating properties. These 1.3 million Aussies are the ones that are in particular danger of not being able to afford their properties that they have invested in. This may lead to the potential of a flurry of sell-offs, leading prices to potentially plummet.
Now, as we see the economy start to open back up in some parts of Australia, we could see people selling off their negatively geared properties as they can't afford them anymore. And this could lead to the increased amount of urgent sales, leading to housing prices to drop. CommBank has already predicted a 32% decrease in the housing market, while S&P has predicted a 10% decrease. Beyond the numbers and the price predictions, Australia's housing growth is driven by population growth, and population growth is primarily driven by immigration. And because all of our borders are shut right now, our immigration numbers are the lowest they've been in over 100 years. Furthermore, as we've talked about, construction has a certain lag to it. Construction that started 6 months or a year ago might only be finishing up now. And if that happens, then we will see a flurry of new properties start to appear that is trying to meet demand that isn't there anymore. So when we look at it fundamentally, with reduced demand due to reduced immigration and increased supply due to the construction lag, we could see a big drop in the prices. Now, we are just purely speculating based on the research that we have done, and this outcome might not even happen. But the path to this outcome is clear. Whether this happens or not, we don't know. But for buyers who have been waiting on the sideline, waiting to buy the dip, then this is your golden opportunity to do so. But always, do your own research and find out what best fits your financial situation.